All right, all right, all right. Good morning, everybody. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to take a look at what the markets are doing this morning as we are wrapping up the week on a Friday. As we've seen, one of those weeks where there was just not a whole lot of movement. There was a couple of big moves based upon the Fed, and we have seen a little bit of market movement lately. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. We do these live a lot of times in the morning, so if you are subscribed, you're going to get the notification when we go live, so you can ask whatever questions you want at YouTube in the chat window. So please make sure that you're asking questions as we go through today's session. And if you're watching the recorded version, then certainly I will leave your comments and I will get to you as soon as I see them. So let's go ahead and dive in. I'm a little concerned today that we're going to see a pretty decent sized sell-off. And the reason for that is really that we're coming into a Friday where, here's Thursday, Wednesday, Tuesday, Monday, here was last Friday's, here's Monday's movements. So Monday, we started the day, fell all the way down to here, rallied back up to this area in here. If you take a look at what we've done for the week, it's really a whole lot of nothing, right? It's been a week where we've not had a whole lot of movement. And so, a little bit of a breakout trade after the Fed announcements as it rallied up. And no big surprise that we came right back down because we maintained our overall downward trend direction. Unable to put in a new higher high, that downward trend direction kept itself very much in play. And so what I'm going to look for today is, do we continue in the downward movements, right? Do we continue to fall? So if we get below yesterday's low at 2 o'clock that was formed at about 2:30 Central Time, that certainly is something to talk about, but we've been unable to really get above this 4160 in the overnight hours. We fell yesterday pretty much all day. So if we do rally up at some point throughout the day today, I would take a look at this little noisy cricket level that we have right here. That's a little wick over wick below that pivot high. Certainly your stop has to go above that pivot high, but I think that to me is the best opportunity for a reversal short if we come back up and retest some of those highs. Now, I don't know that we're going to make it that high to test all the way back up there. But if you do, I think you've got a pretty good entry right up here, stop above that level with a nice drop. I don't really see that happening, though. I will tell you, I think you're more likely to see price break below 4120. And if we break below 4120, I think that you've got clear room to continue to fall into and around Monday's low. Now, Monday's low was a pivot area where we had a drop base, very strong rally. I can wrap my lines around this as a demand area for a potential to be a buyer, right? There's a potential to be a buyer down there as a day trader, but we have to take that as a confirmation entry because that would be very much a counter trend trade. So in that being very much a counter trend trade, that to me would be the best setup. So those are the areas I'm looking at on the smallest time frame of the S&P. What about bigger time frame, right? On the daily charts, I think that if we get below Monday's low, there's plenty of room for price to continue to fall. And then you start looking at, you got to go back a couple of years to see lower pricing, right? You've really got to go back to see lower pricing. And I think that there's reason to believe that we can test that 4,000 area on the daily chart. I think that's a really strong area where I think you could see price come back into this zone. Prior area of resistance, old resistance oftentimes becomes new support. That would also be from the high right at about 20%, not quite. So we will have almost entered bear market territory in the S&P by the time we get to there. But really, there's really nothing to stop it from getting that far down, and that's another 130 points down in the S&P. And so maybe a decent opportunity to set a swing trade up and hold over the weekend if you think that that continued weakness is going to happen. Looking at the NASDAQ, very similar picture, broke out above that area. Very, very strong supply area exists up here. I just don't know that we're going to come back in and retest that level. And so I would look at these lows. Monday's lows were retested yesterday. And I would look at that as a great breakout strategy and scenario. And when I go back a bit further, that would put us at our lowest level in over a year in the Nasdaq. And so let's go back to a little bit longer time frame and say, okay, where would that bring us down to? You've got lots of room to fall in the Nasdaq, right? That would be our next line of old resistance axis new support, which is 12,320. That's about 400 points lower in the Nasdaq. As far as pure quality daily demand, I've got to look a little further, and I don't really see super great daily demand in the Nasdaq to stop us from continuing to fall. So with that being said, as a small time frame trader, I'm going to continue to look for opportunities to get short. And right now, I think your best opportunity is to get short below 12,713. Now that's 100 points away from where we are right now. So is there money to be made between now and that 12,713? Yeah, I think there very well could be. I think, though, that there's just not a lot of great reversal candidates in here as a place to get short. So if you wanted to give it a run, I think you could go short so long as we stay below this pivot area here, right there at 12,867. If you wanted to maybe try a candle-to-candle opportunity, but your best trade is to be patient and wait for a breakdown below 12,713. Russell 2000 reversed off of this area of supply, was actually a really nice strong move down, sitting above the potential breakout area right now. So let's see if that level breaks down. If it does, plenty of room for price to continue to fall, as with all our other markets. So overall, in an equities market standpoint, what I'm looking at is for price to continue its overall downward trend. We've seen a little bit of a stall this week, but my gut tells me that we're more than likely to see a breakdown and for price to continue to drop. Now, that's exact opposite of what we've actually seen lately happen in crude oil. So crude oil has now rallied up pretty hard. We got all the way down to below 100, but we've come back up to around $110 a barrel in the last few days as we broke out of this descending triangle pattern. So we did have a little bit of a wedge pattern forming here, a little bit of a triangle pattern. But that triangle pattern did not get below some of these swing lows that would have further dropped the market, and we got above these swing highs. And by getting above these swing highs, we've seen that the market has really kind of continued its bullish momentum. So when I'm looking at crude oil, what we're going to be paying specific attention to is this area right in here, 109 by 108. For a potential reversal point. If price comes back into there, I think you may get a good buying opportunity because that has been a little move up just in the last few hours. So look at that for a small buying opportunity today. If you want to be a bit more conservative, you can trim it to just this pivot, 108.58 by 108.16, as a chance to get long. Now, this is not the origin of the move, but really this is kind of a reaction off of this little level right here. This is a rally-based rally above a pivot low. Those are the levels that I prefer. But I think that this one still has a lot of merit to it. And there's room for price to keep going higher above this 111, which is not going to look good for prices at the pump. For those of you that are worried about the cost of petrol and gasoline, we are going to see those prices reflected here real soon as another spike up is inevitable. In gold, we've got a level of supply that was hit. That was a beautiful move away. Confirmation short never gave us an entry, but this area here worked out like a charm. And so now, if I'm looking at gold, I'm going to go to the 15-minute to see, is there a supply level in here that I can lean on? And there's really nothing clean from a supply level standpoint. We've got a little bit of this wick over wick right in here, but we're basing in front of the level, which means that's DTM. That thing is dead to me. I'm not interested in it. could get a little breakout above here as we're putting a little bit of a bull flag. So you could get a long above there for a day trade if you want to get long above 1885. Just put your stop somewhere down here below 1880 so you give yourself a little bit of wiggle room on that position. So those are my levels that I've got set aside for today in our four major markets. When I'm looking at some of our bonds and currency markets, we didn't see too much movement in the bonds after the Fed announcement. We did wind up breaking down, but it just kind of hovered around that zone. I think you've still got to break down below 117, especially with this triangle pattern that's being formed here, a little bit of a descending triangle pattern here. So look for a potential breakdown in there. And then in the euro, we tried to break up, didn't really want to, hit some supply and sold away. Was a really nice move away from that level, but now both of those levels have to be removed. And then we hit the support line down here and bounced up off of it. That actually makes it a better opportunity for a breakout if we break down from there. But on the 4 hour overall, we're very sideways. And so that 4 hour being very sideways tells me that I'm really not going to do a whole lot with these currency markets today. I think your better opportunity today is to just stick in the equities and energies markets, look for potential breakouts when we go and break in the direction of the trend. And always remember this, the trend is your friend till the bend at the end. Stay with the trend. If the trend is down, look for shorts. If the trend is up, look for longs. And follow that trend direction. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until Monday, everybody, I will